way to kick off a weekend is with a quick trip to CME Group for Traders Unplugged. Joining us now, Knuckman and Bob Iaccino. Good morning, guys. And here's round number one. Are low wages good for stock prices?
Well, maybe in the short term, but you've got to remember that those employees are also consumers. They have to have money to spend in the long run, and it does cost a lot in the retail market, because most of these low-wage companies are retail stocks. It does cost a lot to train those employees. It says $3,500. That adds up to nearly a quarter of a year's salary.
Well, not to offend those employees, but it doesn't really cost a lot to train those employees. I actually grew up in the food service industry, and those are high turnover business.
Right. Would you have less turnover if they paid them more?
I don't think so, because the jobs suck, quite frankly. They're horrible, hard jobs to do. So those companies have very low margins. Grocery stores operate about 1.5% in their margins. So to pay higher wages, it actually makes a measurable difference.
Some of them I like as stock opportunities. McDonald's has an opportunity to get back up to 103. And looking at Starbucks, a move up here above 80 could see Starbucks go to 90.
Round two, the short story of the following 5 most shorted stocks. Which is a go in your book? The stocks include SIRI, XM, Intel, Frontier, Comcast, and Micron.
Comcast, to me, is a huge short. I really don't like Comcast at all. I think they're a target of politicians, government. They're a target for
cable cutters?
Yes, absolutely.
People are getting away?
With the internet, Comcast, it's going to be a commodity at some point, whether the government does it or
So you're thinking this internet's going to stick around? It's for real?
I think the internet's going to be here. I don't think Comcast
Sirius is a $3.50 stock, so how do you short it? There's limited downside. The one stock that I think technically, and if you're going to go short, you've got to be very, very nimble. You've seen the markets come back every single time, is Micron. Micron had a triple top at 34, but again, you've got to be careful on that downside.
Round number 3, yelling, selling. It's been said a megaphone top is in play in chart action. Is this the beginning of the end for the stock market rally?
I don't know how many people can hold up these signs. It's the end. The end is near. The end is coming. I don't know. But if you look at the chart pattern, yes, it is a wide megaphone. So we'll see which way it breaks. But overall, the trend is up. The resiliency is amazing. And if you take the measured move of this last sell-off, we still have about a 10% more upside. Until proven otherwise, that's the direction I'm looking.
The problem with technical patterns is people like Alan don't know how to play them. He knows what they are, but they don't know how to play them. The issue with the upper end of the megaphone, right, is that you're supposed to sell against it looking for a break, but that goes higher and higher each time. So the pattern stays intact. Prices go higher, you're short new.
So you're saying the market's going higher?
And your bonus round question for today, pop singer Taylor Swift recently made headlines by shaking off doing business with music streaming service Spotify. Can you guess her net worth? Is it $10 million, $55 million, or $200 million?
I'm going to go $55 million.
Yeah, $55
Isn't she like
million.
14 years old?
Yeah, she's like 9.
She's 24, and the answer is $200 million.
No way.
Wow.
That internet is working for somebody.
That's a whole other show. We've got to go on that note. Thanks for playing, guys. First Business continues right after this.